And a warm welcome to you, Dr. Mark Mobius, with us from Dubai. Can you hear me?
Yes, thank you for those kind words.
Thank you for joining us. And 2020 was a tough year, we have to say that. COVID-19 is still with us. But in your New Year's greetings, Mr. Mobius, you say you are a cautious optimist. Why is that?
Simply because I believe there's going to be an incredible recovery globally, and not only in emerging markets, as a result of the solutions that are being found regarding COVID-19. So we're looking forward to a very, very good growth opportunity in emerging markets.
And you followed the emerging markets, of course, from the very beginning. And can you give us the picture of what has actually happened as you see it?
Yes, I have a few slides which I can show you, which illustrate our objective and our stance regarding emerging markets. The first slide shows you that emerging markets offer an incredible growth opportunity compared to developed markets. The IMF is forecasting emerging markets to grow by 6% this year, compared to the average of about 4% for the developed markets. Most importantly, emerging markets' middle-class consumption is growing faster in emerging markets than developed markets. So in 2007, the global share taken by emerging markets surpassed developed markets. So this is just one sign of what is happening, and you can see that in the slide. On slide number 2, I want to point out that since I first started investing in emerging markets in 1987, we only had 6 markets in which to invest. Today, it's over 70. Also, there has been a significant shift in sectors. As you can see, since 2010, technology has gone from 19% to 41% weighting in the index, while energy, financials, and basic materials have declined in weight. So the explosion of technology in emerging markets has opened up many, many high growth opportunities for us. On slide 3, you'll see that recently, while the US dollar has weakened, emerging market stocks have surged. The Biden presidency will result in more US dollar spending and will accelerate global growth, particularly in emerging markets. Most importantly, emerging markets are undervalued in price earnings and price to book value terms. Finally, flows into emerging markets, equity funds, have been accelerating since May of last year. We expect this flow to continue. On slide 4, the next slide, it's now clear that ESG leaders outperform. This is particularly true in emerging markets. Those emerging market companies that excel in environmental, social, and governance standards have better returns, maximum drawdowns, and Sharpe ratios. Just as important, paying attention to ESG is a key risk element and management tool. Because of this, our orientation in managing money is to actively engage with the companies in which we invest. We therefore limit our portfolio to no more than 30 companies, and we engage in order to improve corporate governance and thereby impact environmental and social objectives. On slide 5, you'll see that we have one example in our portfolio of a company called APL Apollo Tubes in India, as an example of what we're doing in terms of engagement. We decided to work with them on a number of fronts. First of all, change their auditor to one of the big 4 in order to achieve better credibility and transparency. Second, to articulate a 3-year vision to improve planning clarity. Third, conduct a survey of target-specific ESG factors. Fourth, publish a materiality matrix. Fifth, published a sustainability report in line with the GRI, the Global Reporting Initiative guidelines with clear long-term targets. 6, adopt reporting standards in line with the TCFD task force on climate-related financial disclosures. 7, integrate ESG targets into executive compensation. And finally, and not least, in line with what you were just discussing, improve gender diversity at the board level to put more women on the board. As you can see, the stock prices perform very well, in great part because of the changes I have mentioned. So that's a general summary of where we are, and I thank you for that attention, and would be happy to take any questions you may have.
Thank you so much, Dr. Mobius. And it shows it pays off, basically, to care about ESG principles, is what you're telling us. And this has been something you have worked on for a long time. What is the biggest challenge working in emerging markets and focusing on governance?
The biggest challenge, of course, is not very different from working in developed countries, and that is to obtain the cooperation of the managements of these companies to help on ESG factors. In fact, when we're visiting companies in line with our research to see whether a company is eligible for investment or not, one of the first questions we ask is, are you, the management, willing to engage with us in a friendly and cooperative manner in order to improve your ESG performance and improve corporate governance in general? And if the answer is no, then we will not invest. So it's not easy to find companies, and I would say it's probably 1 out of 10 are willing to work with us in this way. But those who are willing to work with us, we can see tremendous opportunity and improvement.
And what kind of time span do you have for your investments when it comes to governance?
We look at a 5-year time span, generally speaking, when investing in a company. But usually within the first year, if we do not see substantial changes and the willingness to cooperate in a more deeper manner, then we will probably sell the stock. In the case that I just mentioned, APL Apollo, they were very, very cooperative and willing to work with us and cooperate and take action. This is really the bottom point that we should emphasize. A company that's willing to take action and make the changes can really improve, and their stock price shows it.
We have questions coming in already from the viewers, and one is asking, given the political system in many of the EM countries, what incitements are there for companies to actually improve governance?
That's a very important question because, as you know, a democratic framework in emerging markets, in fact, anywhere in the world, is not common. And in fact, if you talk to people around the world, they often are talking about Aristotle. If you remember, Aristotle said, the best government is a benevolent dictatorship. And this is a preference that you see in a lot of the emerging markets. They want to have a strong one-man or one-party rule, and you see that around the world. You see that in Singapore, you see that in China, you see that in many, many countries. Here in Dubai, you have leadership which is very, very cooperative and very mindful of the benefits to the citizens of the country and is doing a terrific job. So it's not common to have a democratic framework. But that does not interfere with our cooperation with companies. We find that companies in any of these countries are willing to work with us and improve. And they can do so without constraint from the government in any direction. So the government structure is important. And of course, a benevolent dictatorship or benevolent one-party rule is not bad. It's often very good. And that's what we look at. We look at how the rules and regulations are formulated. And most importantly, the rule of law is credible and important.
Another person, an investor, asked, what can foreign investors do about corruption?
That's a very, very important question, and corruption is with us around the world, in democracies, in dictatorships, in any form of government, and in any level of economic activity. As you know, you can see this in the US, quite a lot of corruption. Where you are in Northern Europe, not so much, probably very, very good corporate governance in Sweden in terms of the government not being corrupt. But you'll find corruption everywhere in the world, and you have to work around it. You have to realize that it exists and look for it. And of course, one of the things we examine very carefully when looking at companies is the degree to which they are engaging in any kind of corruption. Of course, that would be a no-no, and we would exit that company immediately.
Actually getting that information in emerging markets that may be a little bit less transparent, how would you go about getting that?
Very important to not only talk to the company, but talk to their competitors, their customers, and to anyone else who can tell you something about the environment and the company behavior. So that's the reason why some of the ESG factors are very important, because if you examine the social framework, in other words, how is the company behaving in its community, how are they treating customers, the neighbors, and so forth and so on, you can gather a lot of information which is very critical in evaluating the company. So you can't just depend on what the company is telling you. You have to really go out into the street and talk to people who are dealing with the company in some way or being impacted by the company.
We've had discussions earlier in the day, Mr. Mobius, about inflation, about the dollar and so forth. And you've actually, you have a new book, and inflation is the topic of that book. And if we turn to inflation, you say there is a myth there. What is the myth?
That's right. The inflation myth is, first of all, the measurement of inflation is very flawed. The measurements are not accurate and do not reflect what is really going on in the society. And in the book, I go in detail about how these inflation measurements are flawed. The second thing I point out is that inflation is not a matter of higher prices, but a devaluation of currencies. All currencies around the world eventually devalue, and that is reflected in the prices that people pay. But at the conclusion, and one of the reasons why the subtitle of the book is the deflationary environment, and why it is so good, is that the wonderful world of deflation is being caused by a tremendous increase in technology. The impact in technology, particularly in emerging markets, is very, very important. And that's resulting in lower and lower prices for goods and services in relationship to the incomes of people around the world. And one of the reasons, another reason why I mention inflation is not critical is because wages and incomes are rising faster than inflation. So that, combined with the technology changes taking place, particularly in emerging markets, we're entering a wonderful world of deflation where things are getting cheaper and more available to people around the world.
Let's turn to one of the questions from our viewers again. There is someone out there asking, what is the largest underappreciated risk in emerging markets?
Probably the largest underappreciated risk is the movement underground, the underground movements as regards to various myths that you're finding in various parts of the world. In other words, in any country, you will find various beliefs or myths that impact the behavior of people and can be very misleading. So you have to be aware of these beliefs and myths and take that into account when you're making your decisions.
Good advice. And then, Mr. Mobius, do you invest in emerging markets or rather in emerging Asia? A viewer asks.
Yeah, that's a good question because Asia, as you know, is critical in emerging markets. It represents the largest part of the emerging market spectrum. But if you look at our portfolio, yes, we're invested in Korea, in Taiwan, in China, in Vietnam, but we're also invested in Turkey, in South Africa, in Brazil, and other countries because we're finding opportunities all over the emerging markets world. But of course, Asia being most important, you'll see us particularly in India and these other countries that I mentioned in Asia.
And Latin America, of course, isn't doing too good in the pandemics. What are your expectations for the emerging markets there?
I believe that with the introduction of the vaccines, there will be big strides in the cure of the pandemic. And most importantly, the treatment of those who have been affected with the COVID-19 the treatments have been getting much better. So I believe we're entering now an era of much more optimism. So this year, as I mentioned, economic growth will be very good, and you'll see a return to normalcy as we move forward with more vaccines and better treatments for COVID-19.
And then we mentioned currency, and how important is the dollar for emerging markets?
That's a very key question because most frequently currency plays a big role in how we invest. And by the way, a weaker currency, for example, if we confront, let's say in Turkey, the currency gets weak, that's not necessarily a bad thing for individual companies, particularly if a company is dealing in US dollars. In other words, is exporting or earning money in dollars. With a weaker Turkish lira, they can actually be doing better. So currency doesn't have to work against you in a weakening environment. But if you look at the dollar, you'll see, as I pointed out earlier, the dollar index has been declining, and that meaning that against many currencies, the US dollar is getting weaker and weaker. Now that is very good for emerging markets, is because many companies fear emerging markets because of weak currencies. And when they see these currencies getting stronger, and by the way, many of these countries have seen dramatically stronger currencies against the US dollar, people get more confidence in emerging markets. And I think it's one of the reasons why the flows into emerging markets have been increasing.
One currency that I know you have strong views on is cryptocurrency. And we've talked a little bit about Bitcoin earlier today. What is your view on the developments there?
Well, as you know, cryptocurrencies have really gained incredible popularity. The volatility has been very great. And you see, just like any other currency, it's a matter of faith. In other words, you spend US dollars, you save US dollars, or you save euro, or you save Swedish krona, because you believe that this currency will work for you. In other words, you'll be able to use it. And that's the same with cryptocurrencies. It's a matter of belief. Unfortunately, cryptocurrencies are not being accepted by countries around the world to pay your taxes. So this is an issue that you have to confront with cryptocurrencies. I personally would rather invest in good company stocks rather than in cryptocurrencies.
You have actually compared it to religion, haven't you?
That's true. It is somewhat of a religion, particularly among the young generation.
Yeah. We have another question here, which is about the countries in EM space. Which countries do you think will likely offer the most attractive investment opportunities for the next 10 or 20 years?
Well, I think I'd have to put India at the top of that list because now India is embarking on dramatic reform, dramatic changes, and it's a population of 1 billion people, very creative people. You can find very successful Indians all over the world, just as you find with Chinese, but particularly with Indians because of their language ability, they're able to succeed in many countries around the world. For example, here in Dubai, there are many Indians very, very successfully employed and developing businesses. So I believe you'd have to put India at the top of the list. But I must warn people, don't pick countries, but pick companies. There are terrific companies in any country around the world, whether it be in Africa, in Latin America, in Asia, in the Middle East, or in Europe. So you must pick companies first. But as I said, you'll probably find more opportunities in India and then followed by China.
Saw a glimpse of one of your other books, Invest for Good, earlier, Mr. Mobius. And what is the driving force that you have as an investor?
Well, the reason why we wrote that book was to emphasize the importance of corporate governance and how good corporate governance can improve the prospects of a company. And more importantly, good corporate governance can then affect the environmental, social factors that impact the company. So I would say Invest for Good really is investing to improve corporate governance, which in turn can improve the environmental and social environment.
And of course, you've had several decades following the markets, and you've seen a lot of risk and you've seen a lot of things happening. Is there something that you have seen that you would like to share with the audience? Some event that really shaped the way you think?
Probably the most important event was at the beginning of my experience in emerging markets in 1987, when, as I mentioned, there were only a handful of countries in which we could invest. And it was really interesting at that time, as we began to explore other countries and open up other countries, the willingness of countries to change from a socialist or communist system to a market economy system. And it was most dramatically illustrated in Eastern Europe, where we were investing in Poland and Czech Republic and in Russia, for example, where they adopted a market economy system. And that was so impressive to see the changes that took place. When I first went into these East European countries, the shelves in the markets were empty. There were no goods to be sold. The only way you could get anything was through the black market. And then within a few years, you saw an incredible change. And this you saw it duplicated in countries around the world that moved from a socialist or communist or dictatorship system to a market economy system. So this has been the most impressive change that I've seen.
A question again from the viewers. What impact do you think the limitations of vaccines to EM markets will have to growth in these markets?
The interesting development that you're seeing in these emerging, and particularly the so-called frontier markets, many of whom are in Africa, is the development of private equity investments. Because in many of these markets, the stock markets have not been developed or maybe not even in existence yet. And there's a need for initial investors to go in and develop companies so that they're capable of being listed on a stock exchange, whether it be New York, London, or a local market when it gets developed. So I would say that kind of private equity investing is becoming more and more important in the frontier markets. And of course, the product of these private equity investors is fodder for us. In other words, we can then come in and invest in these companies that have been developed. The other area is impact investing. As you know, more and more funds are being developed to have an impact on society directly. And that is also having a beneficial and really revolutionary impact.
I think it's really interesting that you're bringing in Africa here, because we haven't talked too much about that. That is where the great population growth is going to happen as we go forward. And what potential do you see in Africa for investors?
Africa has incredible potential. The benefit that Africa is now experiencing is the technological impact. The technology is now moving so fast that Africa is now able to, what I call leapfrog. In other words, jump over all the old technologies into the latest technology. And probably the best example of that is M-Pesa in Kenya. In Kenya, you had the telephone company, Safaricom, develop a payments transfer system using small cell phones so that people around the world without bank accounts could transfer money to their relatives and friends anywhere in the country. That's an example of a leapfrog technology which was developed in Africa first before it was developed in other countries around the world. So you're going to see more and more of that going forward. African countries benefiting from the new technologies developed in the US, China, or wherever, and really benefiting and moving very, very quickly up the technological ladder.
For new and inexperienced investors looking at emerging markets, what is your best advice?
The best advice is to learn as much as you can, read as much as you can, travel as much as you can. I know it's difficult now with the COVID-19, but as soon as there's an opportunity, travel and talk to people on the street. Be ready to engage with people, because that's the only way you will be able to make intelligent decisions. Information is essential. The right information, of course, is even more essential. And that means getting information from all sides of the continuum, negative and positive.
Thank you so much, Mark Mobius, for being with us and sharing all this advice. Thank you so much for joining.
Thank you very much.